Truth, baby. Market vitals, the levels you need to triage. Matt, coming out with a share and a reshare from Carol Roth. She said a great Veterans Day here. To all our veterans, active duty military personnel and their families, thank you for your service. Your service, your sacrifices, and defending our freedom. I am grateful. I am grateful. She is grateful. I know you are grateful.
Absolutely.
And I said it on the way in, Matt. There's obviously a lot of discourse, a lot of angst, a lot of arguing, and the thing that makes it so palatable is in this experiment that we call the USA and freedom and democracy. There's so many people that have served, and have given the ultimate price for us to sit here and fucking bicker with each other. And that's what makes
and honestly, like this now I think we're a couple generations really removed from that. And I think that's part of the problem that we have, is that there's no respect for the freedoms that, that people have to talk about abortion, or to talk about gun control, or to talk about pronouns for that matter. And, that freedom is not easy to come by. And, especially when you look around the rest of the world. And I think, it's not easy to watch this, and the lack of respect and, for that history. And as a history guy, like it saddens me somewhat. It really does. So, let's tip our hat to those that, fought blind, and I say blindly, following orders, right? Following orders, for wars that they may or may not have believed in also.
right on.
So not an easy thing for, you think about people today, and the reasons why people aren't joining the services, and it makes a lot of sense.
All right, man. Thank you.
Thank you for your
service.
Thank
you all out there. Matt, I want to do along this, a thread of I want to just, breaking news. It's gone, and it's gone. But I've been looking through some of these threads on how the heck did this happen. And there was a video share of the CEO of Alameda, who was originally set up just to be the market maker for the FTX platform. I talked about this yesterday. Like when you are the market maker in something, you have such a giant advantage. Especially, I don't know this to be a fact, but if they can see the book, if they can see where all the stops are, where the support and resistance is. I was a much better trader in a dual trading pit when I held the deck. That's just the way it is. You're a way better trader when you know what the market has in store for you, a la what's in the deck. But she said this one thing in this one interview, is she said that we don't use stop losses really, because we don't think it's a very effective risk management tool. well, and we argued about this before we came in, how maybe stock traders are more hodlers and they don't really, and I actually tried to get to this, like, how do you lose $22 billion or but whatever the hole is? How do you lose it? And you were like, well, in the stock market, it's really not that hard if you have leverage available and you can build positions in these giant tech companies.
Yeah.
And they get schmeezed by 70%. You can see how it evaporates. Man, let me go to the chart and I'll let you talk as I do this, because I want to show you, as a commodity mind, not only do you have stop losses always, right? But you also have to consider that not only am I wrong, but I need to go the other way on this trade. And I want to point out this trade that I was completely wrong on. And it was the bean corn spread, intercommodity spread. And we had sat here when we came down here. I was like, as long as we keep this lower momentum, I really think this thing has a chance to go to its longer term place that it's been, which was more around 480, 450 ish. And I said, if we get back above 720, I got to be out of this. And then the way the chart developed, not only did 720 get taken out where I needed to be out, but as a standard deviation trader, it kicked these bands north. And not only did I need to be out of this trade, or do you need to be out of this trade, but you needed to go the other way on it. Like, you need to have that you need to have that mentality in commodity trading, in leverage commodity trading, where I need to be able to completely flip my position 180 degrees to where I thought this thing was going. And it's different than maybe in the stock market.
Well, it is and it isn't, because a lot of hedge funds use, let's say they have $1 billion. A lot of them trade like they have 7 billion sometimes. So it just depends on how you manage that. They don't, some tell you they use leverage, some don't tell you they use leverage, but it's difficult to discern, I think, sometimes for people what is going on. And that's why you really need to understand really how the behavior is for those, for those types of things, if you're going to invest in them. And, I'm sure what I would say, Bob, is listen, if this were a hedge fund and they said, listen, we're going to be multi-strategy or whatever, and we're going to trade crypto, that's one thing. But then all of a sudden they started trading stocks. What do you know about stocks?
Not only that, they're the
No,
smartest
that's
people
all.
in the room. Exactly.
But they weren't. But the problem is they weren't a hedge fund. They weren't regulated in any sense, and they thought they were traders. They thought they could beat the market. They thought whatever they thought. I mean, who knows what they thought? We'll probably never know. I think more interesting, the part of the story, I think that, and throw up the chart of the biggest donators to this midterm election, because I think that's.
Let me do that. Let me,
if you want to talk about, some of the biggest donors to the midterm.
Well, yeah, the plot always thickens. This is their bankruptcy announcement from FTX. The thing that I find amazing also here is this is their bankruptcy announcement, naming FTX and Alameda Research, right, and approximately 130 affiliated companies. Like, if that doesn't seem like smoke and mirrors, I don't know what does.
Right.
And then,
but again,
but then here it is. Barbara Fried, Sam Bankman-Fried, that's the son. Joe Biden announces presidential campaign. 13 days later, Sam Bankman-Fried, son of Barbara Fried, co-founder of these political action committees, yada, 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 launches FTX crypto exchange. Exchange is a success, and then he becomes the second biggest donor to the Biden campaign. Again, I got to tell you, when you see this, I don't know if any of this is underhanded, but it sure smells like it. It sure smells like it. And that's the problem that we have, and that's why it's particularly angsty. And believe me, I don't think that this is.
And I don't think there's any, for me, anybody that is allowed to give, whether it's Soros and a real market, hedge fund guy, or Fried, right, whatever this new thing is, it's the same, and they're trying to buy influence. The fact that we allow unlimited, money to go into all these different things with NGOs and everything, like, it's so crazy and weird now. So you either shore that up and fix that process, or it just, everything's for sale. I mean, we're a banana republic now. Everything is for sale.
Agreed.
Matt, that's the, and again, it wasn't like that. I mean, now we're back to where we were and why we left the monarchy in Britain.
Corruption. The corruption is just killing. You shared this from a George Soros quote from Friedrich, originally sharing it. I don't like working. I do the absolute minimum necessary to reach a decision. There are people who love working. They amass inordinate amount of information, much more than is necessary to reach a conclusion. They become attached to certain investments. I think that's great there.
That is great, because that's exactly what he's saying is, I'm a trader. I'm not a holder. That's what he's saying. And so that's why I love that quote, because regardless of whatever we think about Soros and his influence on the political situation and the banana republics that he's able to control, including the US, right? Or at least there's a lot of money that he's throwing at different things. He's, pretending to control. But with that in mind, like, it is, that's the difference between the Alameda 19-year-old gal who's running $8 billion into the ground and this guy. Let's just, let's use today's let's just look at the market the last couple of days, right? Let's look at the NASDAQ, and we're breaking out. We're hitting new highs again here. And let's say you sold this test of the overnight high, and then it came back, right? It came back, but guess what? It came back to a 61.8, retrace. That was a perfect buy again. And now we've gone up another, 150 points. So if you thought if you couldn't reverse and get long or cover your short in that little counter trend that you had, the trend continues higher, Bob, in the NASDAQ and the S&P today. It's a holiday. It doesn't matter what you think. It doesn't matter what I think. This thing is going higher. It's going higher. And yeah, we're breaking out. And if we close up here, I would argue that, again, we got more higher, and the dollar is behaving. It's gone much lower today. And we talk about this all the time. So I want to bring the dollar up, but we're breaking out. I mean, we're out of this 816, 812 level. That's right where we were. And this is really the pocket we've been in for, the last month. And so we're at the high end. We went from the low end to the high end. And I don't know what we're going to do next, but if we close up here, we got, we still have 3 hours on a really light volume day again. So I would say be careful chasing this.
I agree, because I think that, the dollar, I think the dollar's on a freight train to the levels that we've talked about, like 103, 104.
Here's what's interesting. The dollar actually came to, kind of a midterm level here at 106 or so. And I'm trying to bring it up. And I think I tweeted it out. So it moved really swiftly because, again, there's a hole here. There's a hole in the bucket, dear Martha. And when that happens, you fill them, and you fill them fast. And that's really what has happened here. And we're all the way back to these levels. And again, you can see it pretty clearly. But this is what's interesting. We're right at, on like a quarterly. This is going back to July, August, September, October. So you got basically 4.5, 5 months. I mean, this area, unless that 105 breaks, we probably won't go test that 104. But this is sold off quite a bit and significantly and super fast, right? And that is the reason why the market's rallying. And honestly, that is the reason why gold's rallying, because this is a vote, by the way, and this feeds right into what we're talking about. And people probably don't understand this. This feeds into what we were talking about. People are not happy with the direction of big government. And I'm not going to put it on blue or red. I'm just going to say both of them, right? This vote of no confidence for the US dollar so fast in the last month, from 114.50 down here to 106 in 2 weeks, 2.5, 3 weeks, is a vote of no confidence for the USA. That's what this is. So be careful what you wish for.
Right on.
That's what this is. This is a vote of no confidence. I don't care who is it, whoever is in office right now. This is a vote of no confidence. This is a vote of no confidence for the election that just happened. I mean, this is what this means, right? We rallied into it and boom, no confidence. We don't believe it. That's what it says. That's what it's. No, Bob. You don't see moves like this in currencies, right? I mean, this.
No, if I bring up the weekly to show you,
yeah,
on let me bring it up because
please.
Look at this. This week in particular, I mean, you got to go back to the COVID weeks of ridiculousness to see this type of move.
Yeah.
And then when you go back in time, I mean, this type of range in a week, how about never?
Never. And this is what I'm saying. This is a precipitous moment in our history that I'll mark. I mean, I already have, November of 22. And unless something, drastically changes to reverse this, which is going to be even more difficult, we could be in trouble.
Exactly.
But this plays out to what I just, like what I said to you. If this were to happen, equities are going to go through the moon because there's going to be nowhere else for money to go. Bonds are going to crumble still because they're going to leave that because there's no trust in the government, but they're going to pile into the equities. Hard to believe, but Today, I think, what we've seen in the last 2 days is kind of the beginning of this type of move. We could see all-time highs and have the craziest stuff happening in the US and the world this coming year or two. Like we really
let me just show you on the weekly on the SPOOs. You know what I didn't know, Matt? I started drawing 52-degree lines. Do you know why 52 degrees?
no.
Because that's the degree of the Great Pyramid at Giza. I'm an old Giza myself. Not so fast on the stock market. For me, it's like this level here in the SPOOs, 4,000. The heck is it? 4,055. That's the momentum level on the weekly. I'm all with you. If we can spend some time here above this 3,800 level, 3,900 level, we spend some time, we spend next week and we start making higher highs on a weekly, and we change the slope of this weekly band like we tried to here the last time up, and we got about 3 weeks out of this, and it could not hold it. I have said no chance that this happens for 10 years to recapture these highs, but I will completely flip my opinion if we can change the slope of this upper band in the SPOOs. Completely change.
Yep.
All right, man. While I'm here,
awesome.
let me go here. Congratulations.
Go ahead.
Congratulations to Jim Pellin, Matt, the first pig farmer to be a governor. I actually don't know that. There's probably other pig farmers that were governors in our history. But this guy is the new governor of Nebraska. He's a pig farmer. The reason why I think it's interesting, Matt, is now you have a governor in place. We talked about this months ago. In California, they passed a proposition about selling pork in California that doesn't meet their high standards of how you should be raising pork. And what it does is it opens up a real state-to-state conflict in commerce. And the framers of our Constitution didn't want this to happen, right? They didn't want states to be fighting each other like countries fight each other around commerce with tariffs and roadblocks for access and all these types of things. So now that a pig farmer is the governor of Nebraska, I think this fight escalates. Like maybe he says, you know what, California almonds aren't good for the environment, and because you use too much water in a drought-stricken state, so no more almonds can be sold in Nebraska. It's particularly what they didn't want to happen, but I don't see how this doesn't escalate along those lines. And since we're talking pigs, let me go back here. And Matt, I've been hearing some whispers that I want to go to the daily on the Dees. Dees is front contract hogs, and it looks like it wants to fall away. Actually, this is the Dees Feb spread, which is fine. You can be involved in this. I've talked about this spread before. Short Dees, long Feb. On the spread, belly's very weak, Matt. Going forward, a component of the cutout and an important component of the cutout. These hogs, if they can close back in lower momentum here, which is today at I want to say 83.97, trading 84.20 today. 83.97 going to close before there, becomes very bearish front Dees hogs. Thank you for playing in the meat market. What else do you got, Matt?
Well, I was looking at Apple. I just wanted to talk about the move that it's had. And again, this is a monster $2.37 trillion company. And it in the last 2 days and this move in the NASDAQ has gone up over 10%. That's right, 10%, 134 on the close Wednesday. And today we're trading up here right now, 149.50. New highs at the top of this, 2-week bracket. So again, hard to believe 157. I mean, trading like an illiquid mofo. This is the hard thing about this market. It's super illiquid. I would say our equity market is back trading like cryptos again here.
Man, I got to tell you, I don't understand how, if the dollar is getting schmeezed, I don't understand this, because you would think people would need, like, from a global perspective, you would think if people would need
Because
dollars,
no,
wait a
no,
second, wait, let me finish my thought, and then
okay,
and why it's confusing for me.
yes,
You would think globally, you would need dollars to invest in the US stock market. So that should be a demand boost for dollars. And yet the stock market is rallying while people are selling. They got to be selling it for something else. Like if you're selling dollars, you're buying something else. It's not
you're buying
a
equity.
zero sum. No. You have to hold the dollars to buy the equities.
Yeah,
So
when the dollar sells off, it's a vote of non-confidence for your bond market.
I get that. I
And the
just don't
bonds are up
understand
today.
why
The bonds are up today, right? So don't listen to me, right? I'm talking a macro thing. When that no confidence comes and nobody's buying the bonds anymore, the bonds will collapse. And actually, and this is going to blow people's minds. The bonds will collapse, and the money's got to go somewhere. So the money that's been sold out of the bonds is then going to rush into U.S. equities, because there's nowhere else left to go in the public sector. Public sector is bonds. Public sector.
I get that.
That vote of no confidence leaves the bonds. Where else is it going to go? Public companies, right? They're not owned by the government today in the United States. They're not owned by, well, I just said today, right where we are. They are not owned by the government. So that becomes a factor in what I'm talking about, right? Because now there's none left. There's none left for that to happen. So when that money leaves the government bonds, which has always been safe because the government is no longer trusted, where does it go? Where's it going to go? It always has to go somewhere. It's going to go into hard assets, which means commodities, which means real estate, believe it or not, and even with high interest rates, and it also means equities. And I'm not saying it's happening right now, Bob. We're not quite there, right? But this is how I see this potentially playing out if we were to do this.
All right, man. We got college football. I'm sorry for ending your reign of terror.
Yeah,
last week.
You totally when I called it last week, I was like, I should just fade. I should totally flip all my picks.
You should, hey, like a good trader would, right? Just flip my picks. So what do we got this week? College football. What are you looking at?
All right, so the board is tough to me, like, because we're getting to that part of the season where everybody, we're in the game 10 basically. So everybody has a pretty good feeling of who is who in the market of sports gambling, right? Especially in the college, like we're kind of set. And I've got some games here, and I've only picked 7, so I went much lighter here.
And that's what you do, by the way, when you go bad in your trading, you lighten up.
Well, I mean, I had a
narrow your field.
I had a 1 week, I had a 1-win, whatever, 2-win victory 2 weeks ago, and then a 2-loss weekend last week, right? So the last couple of weekends have kind of scratched it. So this weekend we're going to go kind of with the bigger, not really big games, but what I would call tighter games. And I've got the University of Tennessee at home against Mizzou, and I like the Vols to bounce back because, again, they're sitting outside. They got something to play for again. They're outside of the top 4. TCU is playing Texas, right? And they're number 4, and Tennessee is right behind them at number 5 in the current polls. Tennessee is 17.5-point favorites at home. Take them against Mizzou. Next, we're going to jump to the Big Ten. We got Big Ten, Illinois again. Last week losing, and needs a bounce back here. And they're looking now. They're not going to be looking forward so much to Michigan next week. They've got to take Purdue on at home and beat them. -6.5. Take the Illini. They're going to want that game with Michigan coming up into town next week. If they hadn't lost that game, I might go the other way. But this week, you got to take Illinois. LSU, and again, context matters when you're sports betting here. LSU -3 at Arkansas. Hard to believe Arkansas actually started out favored in this early in the week. It was like +3 for LSU, and it has gone back to about -3. So that line obviously was wrong for Vegas, and the money has said so. So I'm going to go with LSU. But again, it feels like a trap game a little bit to me. So I'm not, I'm just throwing it out there. That's what I'm thinking. Staying in the East Coast, we're going to go ACC. Georgia Tech playing Miami. Two really shitty teams. Both of, I think, 3-5, 3-9, 3-6, 4-5, something like that. Georgia Tech at home, take them over the hapless Miami Hurricanes, -1.5. Next, you have going back to the Big Ten. We're going to go to Iowa City at home. Iowa is hosting Wisconsin. Wisconsin has been rolling. Iowa has just been the same consistent, no offensive team all year. We're going to go with the Hawkeyes, getting plus points against Whiskey at home they're getting 1.5. And then Baylor -3.5 at home against Kansas State. The Big 12 will represent there, and we'll go back to the ACC for our night game. UNC getting points.
Wait a second. Who do you like, Baylor?
I like Baylor -3.5 over Kansas State. And then UNC is playing at Wake Forest and is actually getting points, and they're 8-1. So this feels like a trap to me, but I'm going to be the retail here. I'm going to be the mush, and I'm going to say take the Tar Heels with the best quarterback in the land. Drake is definitely the best quarterback, +4.5 at Wake Forest. Wake Forest is not a bad team, so I'll take the points though and say that, the best quarterback in the land is going to win this game. We shall see.
We got Philly +11 or -11 against the for sale Washington Commanders.
Perfect.
Interesting, Matt. I saw a thread here on Washington. There's at least one now lawsuit suing the organization, the ownership on all of the sexual harassment charges that they've seemed to have swept under the rug.
Shuffled, yes.
Yeah, interesting that. Not so fast. There's a public domain that is going to want to have discovery. So that's the only +10 NFL game, and then we got the Bears, Lions. We got our standard bet on that. Lions. Bears, Lions. Where are we going to watch the game is more important.
Wherever the Bear fan wants to watch the game, I'm hoping to watch it.
And Justin Fields,
because frankly, I don't really, and Lee -9.5 is not a double digit, so it's got to be double digits. Just because it's 9.5 is not double digit. It
doesn't
10.
mean 10. Even in this woke world, 9.5 does not identify as 10.
Roll up. We do not roll up. Sorry, Lee.
All right, Matt. Let me. When I was growing up, there was a Walter Jacobson in Chicago, CBS News. I know every week or every night, I'm not sure how often, it was Walter's perspective. And you had to listen to him blather on about his, it was an opinion piece.
Sure.
Basically.
Right.
It's a free world, Matt. So I'm going to do my opinion piece.
Wait, did you say it's a freed world?
Exactly.
No, and freed as in Bankman Freed?
Exactly. Listen, I'm going to get politically incorrect here. I just want to let everybody know that. So here, let me bring him up, and then I want you to really just hone in on the specimen here of Sam. Matt, if me and you own a nice restaurant, there's no chance we let this kid work on the front end of the front of the house. Like, you imagine walking in and you're going to drop 100 on a steak dinner, right? And this guy meets you at the door. Yeah, can I show you to your table? I'd immediately be like, son, did you wash your hands? Because I don't even want to shake your hand. Even if you were going to let him be in the back of the house, you'd be like, you're kind of a slob, even if you're washing dishes. And I say this because when we were growing up, there was this really popular book called Dress for Success. And unfortunately, even in the woke world, people still form opinions about what you look like. And for me, the thing that blows me away is that this kid was able to secure all of this money looking like this slob. Now, I'm not saying that you would feel any better if you got rugged of your money. If this guy was in a beautiful suit with a nice pullback hairdo, looking good, feeling good, like, do you feel any better that a slob took your money, or that, Corzine, a senator, dressed nice, Wall Street look, he took your money? I'm not sure. It's just a question.
Yeah. I would say that he feels that he feels He's against what you're talking about, and that's why this generation is like this. That they can fully tat up their faces and be the CEO of a $1 trillion Bitcoin frenzy, right?
I guess. I like it. I like this now that I got the money just floating around me. Maybe there'll be a little coming my way. It's almost like, we talked about this earlier in the week, that it's really the Enron thing, a redo of it. And I think part of the problem is that these people thought they were the smartest people in the room because everybody told them they were the smartest people in the room. And then it really becomes hard to navigate in the world from that perspective. Wait a second, we're the smartest people in the room. Everybody told us that. Look at all this money that they've thrown at us.
Right.
And we don't have to use stop losses because that's not an efficient risk management protocol. We've come up with something better. People just keep throwing money at us. I don't know. I digress. I digress. It's a
difficult world that we are residing in. And I don't know what happens. I sure don't know what happens anymore. I don't think Bitcoin has a long future though. And I've said that from day one. So I'm going to go to my, I don't think Bitcoin will see 100,000 before it sees zero.
Yeah, and you get to bet on that, which is a beautiful thing.
Right.
All right, let me share one more.
But I also know where I'm wrong, and right now the chart just has been trending down for a long time.
Speaking about trending down, this is the Euro FX futures monthly chart. Again, long-term view here. But for me, this bracket, I think they got to retest this 106, 107 level. It's the monthly average, and it's also these lows put in here in April. Back in 15, 16, they spent a bunch of time around this level. Floors become ceilings, ceilings become floors. And that's for me as a ceiling that they're going to run and test. And I guarantee you there's going to be a giant argument around this 106 level, 106, 107 Euro futures, Euro FX futures.
Well, and if the dollar continues its schmeeze down to the levels that we're talking about, it's possible. It's possible that, we see that was it 108. Yeah, 108. Even we could even see 112 if the dollar continues the schmeeze, right? So
I agree.
We're at a juxtaposition for sure. Things are, the argument is being handled and moves are being made that change is on its way. So that does kind of make sense. And again, nothing goes straight up, nothing goes straight down. And bring up your dollar just to give us the numbers that you're seeing in the longer term there, and the same time frame that you just looked at the euro. I'd love to see the dollar and see what your thoughts are.
1 second, let me find it again. DXY. Yeah, this is interesting. Always interesting, right? I like charts. I'm a chart guy. Monthly, we've taken out the momentum level. We did have an argument there, right? That 109 level, there was plenty of action there. Could not hold it. And again, for standard deviation modeling, it's an if-then statement. If that level held, would have stayed bullish. It didn't hold. So the if-then statement I make on whatever fractal I'm looking at in standard deviation modeling is, if that didn't hold, then the next level is the average, right? 103, let's call it.
Right.
And that also lines
kind of
up
the last high, right?
Exactly. And that's when I love when other things line up with the same thing. And I know you have that level on the profile again. So there's going to be a giant argument around 103 in the dollar index. And again, this has been one hell of a run. So pullbacks are required. And let's see how it settles out in the next month here. If we come down and test this average. The other thing you got to look at too, Matt, and I do this all the time, is what is the slope, right? So 101.73 to 102.85. So just a point. So that's gonna next. If we don't get it this month, all I'm saying is next month we're going to be in about that same spot of those highs, 103.
Well, I'm gonna bring up a chart here just to talk about it, because we have been talking about it, but we said this just yesterday, that if the dollar breaks that level there at 109.50, you know, you're really looking at a $5 break to like 104s, right? And look how swiftly we're doing it. So that's why these brackets are so important, and that's why you really should look at markets from a perspective like this, because there's always multiple brackets, levels, if you will, that we kind of trade in. We go back and forth, we sine wave, right? And then when the sine wave is done, we break. So this one broke, but again, if this goes back to, this was the breakout from that last bracket, was down here at 104.50. So that, I mean, that matches perfectly to this. And although this is the point of control, there's a lot of, I mean, this thing, there's a lot of levels here. This one, they're all kind of the same. So we could trade all the way down to, again, 101. And for my money, I'd love to be a buyer at 101 again, after ringing the register in the 113s. So if you paused, got short, well, you know, ride it down as long as you can. But when it does start turning, you know, I would take some off here right today, because it's such a swift move. Take some off here if it keeps going. And then, you know, that way, if it bounces, because now if it bounces back to 109, it's likely it will be rejected again and go lower still. So this is the way you can take some off and then put, you know, again, inhale, exhale as the position if you're short. And then look for a big area to buy down here at 101. And then if that doesn't hold, you know what's next. So
The end of the world.
the end of the world.
The end of the world as we know it.
It's the end of the world as we know it.
All right, Matt, I think that's all we got. Please visit us at marketfunnels.io. Please share, retweet, plagiarize the broadcast far and wide. And that's what I got. Thank you. I think I froze. He gone.
Yep. Mm-hmm.
He gone.
There you go. All right.